Welcome back to another episode of Balance Your Books podcast. Good morning, Kimberly.
Hi, Kina.
I know. So we still have to tell everyone all of our intro
Okay.
before we get into it. So let's hold it together for a little bit before we get into this topic that brought us here today. So, what do we want people to do? Because what we're talking about today is so important and so important to other businesses. So, what do we all want people to always remember?
We always want you to, when you listen to our podcast, like it, subscribe, share it with your people. Share it with your other small business owners that you know, entrepreneurs, just everybody, because this is important information.
It's important information.
Comment. You can email us at balanceyourbookspodcast@gmail.com. You can get in touch with us. Yeah.
And we're also at balanceyourbookspodcast.com, as well as our firm, which you see above our heads, yourbalancepartners.com. If you want us to support your growth, we are more than just accountants. We are individuals who really care about small businesses, wanting them to grow, and that's what brings us here today. Because about a month or so ago, we did a podcast called Beyond the Barrel, and we talked about Uncle Nearest and the lessons to learn around a business that is challenged financially and what things you can do. Well, a lot has happened since then. And just
A lot.
a lot. And just recently, there has been a new filing that was in the state of Tennessee, I believe. And just to go back and maybe just tell everybody where Uncle Nearest was and all of that. Uncle Nearest is a whiskey brand. The principal owner was Fawn Weaver. Notice I said was Fawn Weaver. And she built this brand up, built into an amazing brand, amazing product, got a lot of people on board, building an amazing location in Tennessee that both Kimberly and I have been to more than once, supported the brand. We have it in our liquor cabinet, the whole nine. And I was growing and growing and growing and about to go into cognacs, all these different things that the business was growing with. But behind that, there was a lot of controls and financial issues going on with the company. And that led to a receivership that was brought on by the court. So a receiver was put in place to
This was
then
last
do a
August,
last August,
2025, almost a
right,
year.
August 2025, who then did a full review and accounting of the entire operations. And now additional lawsuits have been filed, and Fawn Weaver has been removed from the company.
So let's make it clear. It's Fawn and her husband, Keith, but
Yes.
Fawn was the face, the
Yes.
people CEO. And disclaimer, I have admired Fawn from afar and near since Uncle Nearest came to be. Since I first discovered Uncle Nearest and her, I have been a Fawn Weaver fan. And so, yeah.
How you feeling, Kimberly?
First the Fat Boys breakup, and now this. And this is the way I feel because this is a recap episode.
Yes.
And if you listen to our link up episode where we talked about making connections, link up and level up, during that episode, we talked about our favorite restaurant and how they weren't connected with via social media and how we were going to try and make sure went. And at the end of that episode, we had an update and they closed down less than a week after I finally made it back.
Yes.
So that was like, I hate to see it. And now this. Then there's
And now
another
this.
small business that I know that, I need to go see about. So it lends to our passion and why we do this.
Yes.
And seeing these brands and these businesses that we love and respect fail
Yes.
it's disheartening.
Yes.
So yeah.
And the thing is, it's not because they don't have an amazing product. It's not because they don't have an amazing story. It's not because the quality wasn't there. It's not because the service wasn't there. It's because of the foundational things around running a business
Mm-hmm.
that are missing, that people ignore and get caught up in the limelight and the color and all the fun, you know, all the fun stuff. But it's the foundational things that take you under. And I
Yep.
know it's not sexy, accounting's not sexy, financial controls isn't sexy, governance isn't sexy. Well, it's sexy to us,
Right. It's
you
real
know.
sexy because it
It's the
helps you.
ultimate it's the ultimate aphrodisiac for me.
Right. It's sexy because it helps you make and keep money.
Right, right. I
There's
mean,
nothing sexier than that.
right. Let me get a fan out for financial
Look.
controls governance.
I was about to quote a Cardi B lyric.
Oh, please do.
I'm not gonna do it.
I mean, just put the bleeps appropriately. Can you? Does it
It
work?
just basically, I don't. I It's in the middle of the song, and if I'm not gonna, because you have to kind of sing it to it. But she said, "There's nothing in the world I like more than checks." She
Yes.
talks about sex and all these things. She said, but ultimately, it's the checks. We're gonna find that lyric and come back to it. But yes.
Yes. I mean, so let's break down some of the things. This is just so first, I think it always starts with who you work with. What do we talk in our previous podcast? Look at our link up and level up episode. It's about who you work with.
You could
And
even go back to the early podcast. What about your friends?
what about your friends?
Who are
Yes.
you working with? Who are you trusting?
Yes. Because it matters. It matters. You know, people come and they sell you a story. They sell you a dream. They tell you what you want to hear as well. You can't fall for it. You've got to vet people and challenge people. And in the case of Uncle Nearest, their CFO was named Michael Sindaki. Did I say that right?
I
Michael
don't even want to know his name. Senzaki. Michael Senzaki.
Sinzaki. I think I put a D in it. Michael Sinzaki. Okay. This was the chief financial officer of Uncle Nearest. I wonder if he's even a CPA
Hmm.
because he doesn't have it with his name. Most CPAs love we love to put
Yeah,
that
we
at the end
Kimberly
of our
Johnson,
credentials.
comma CPA.
Yeah, exactly. So okay.
Anyway,
So
let's carry
so here you have this dude in charge of your financial picture. And what a CFO does for folks out there, a CFO, especially when it becomes a larger business, they're over a lot. So not only are they over the financial statements, but they're usually over they're over accounts receivable, accounts payable, expense management,
on. The Treasury
inventory,
Department.
the treasury. They're over a treasury. Tell people what treasury is because people don't know.
Treasury is the department that handles your investments. So
And
if
your
you're
cash
getting
and your accounts.
loans, if you're getting loans, that if you are investing in any sort of I don't know, stock or whatever, they're over that. They're over your cash management. So that includes accounts receivable, accounts payable, things like that. But treasury, you may have a director of treasury, but also the CFO, they would report to the CFO. So,
Yep.
yeah.
And it's interesting when you look down like the connections in here, and maybe this, I know this is the exact thing, but it you look at the different roles that he's connected to at Uncle Nearest. There's no chief of internal audit. There's no director of internal audit.
There's
There's
sales.
no. I don't see a controllership function. I don't see a
One,
director of treasury.
I mean,
You know,
these are just the connections.
these are the connections, but I mean, but these are primary roles. They're an Uncle Nearest.
And I'm going to just put it out there. based on
Look
the Uncle
colorless.
Nearest brand and the Uncle Nearest legacy. Where is the color?
Yeah, yeah. Where's the black women?
I
Right?
think,
We have it at the top,
right.
correct? At the top of the organization, we have it as the master distiller, but in
Master
the
blender.
foundational roles, in these
Right.
foundational roles around controls, around governance, I don't see it. Typically for an organization, your head of internal audit reports directly to the board and the CEO. The reason for that is
Mm-hmm.
so they are not encumbered by a CFO.
Exactly.
They have
And
a
they can
direct
check the CFO.
connection. And they,
They
what's
can
that?
they can check
Yes.
the CFO. In other terms, they are that governing body that makes sure that all the transactions, the accounting and things like that are operating properly. They are an independent body that reviews what everyone else is doing.
Yes.
Now, I don't
Exactly.
see it in these connections. Maybe they did have an internal auditor. They're not a public company. Maybe they did have a director of internal audit, but I think if they did, it would
And it
show
would have been
right
it
there.
would have been in the court. It would have been the court filing.
That's true. This is true.
So the court filing. So there's been a court filing against Michael Sinzaki that lists all of the different things that he is allegedly done. Okay. This is based on the receivership's review over this last basically almost 12 months. And I want to go into some of them because so I want people to understand that the things that happen are particularly because you don't have governance. You don't have those type of controls in place. So the chief financial officer, he basically is allegedly stole money and falsified records, forging signatures of the CEO on documents. Uh, you know, Being allowed to be the only signator on doing drawdowns on their lines of credit. And we want to give because I want to spend our time on the controls, but we want to give a shout out to another social media personality who does an awesome job. What is her name, Kimberly?
Her social media, her Instagram handle is I'm not a lawyer, but.
I'm not a lawyer, but check her out because she breaks down everything broader around all of the different things that have happened. We want to spend time on spending. We want to spend our time on talking about it from an accounting and governance perspective.
And let me give it to the people who don't see it because we'll flash it on the screen. It's IMNOTALAWER, but. I'm not a lawyer, but on Instagram, and she
Oh wait,
breaks it down.
wait. How do you spell lawyer?
LAWYER,
Oh, okay, okay, all right.
like lawyer. And
Yes.
everything's spelled correctly. There's just
Okay, all right.
it's just that there's no apostrophe in I.
Okay,
I'm
okay.
not a lawyer, but okay. So
So I
yes.
think she does an amazing job of just putting it in plain language and aligns with what Balance Your Books does around. We want to break everything down for plain language.
Hmm.
So she does a great job. Awesome. Another black woman, by the way. I'm just saying.
Yes. Carry on.
Anyway, so but let's talk about some of the things that from a controls perspective that were not done. And one of them is that, well, I mentioned it briefly, the ability to draw down money from your bank loan. So they had lines of credit, they had, all of those things which are typical at a business, right?
Hmm.
Typical at a business of their size, there are lines of credit, and they're collateralized based on real estate or inventory or what have you. One of the things that he did was he falsified financial statements to get them more money on loans that they shouldn't have qualified for that much.
Right.
So he overstated how much their inventory was, and he overstated how much inventory there was, and so therefore he made it look like they had more assets than what they actually had. Okay.
And he did that. I mean, do we want to go in order? Because I'm wilding out about how he was forging signatures.
Well, yeah. So I was going to say first the loan, right? Then we
Okay,
get
yeah,
to the
so we
signature,
got the
right?
loan. We
So
got
just
the
getting
line of credit. The line of
just getting
credit.
the line of credit, right?
Right.
So he started off with giving falsified statements to the bank. Now, the bank also has accountability in this because they didn't do a review either before
They
they gave
they
the loan.
they
They're
did not.
underwriting because think about all of us out here. You trying to get small business owner. You're out there. You just want a $25,000 loan. They want your firstborn. They want they want they want your house, your firstborn, both cars, all that for you to get a $25,000 loan.
Right.
This is the difference between being a small business and a bigger business that has a brand that everybody knows and everybody's excited about and everybody has the buzz around. You see, the rules don't stay the same for you because, to a certain extent, from the bank's perspective,
From the banks,
because
but it's to a certain extent because he falsified financial statements. What we
he
always tell our
did, but
clients
the
is
due
before,
diligence part of it,
right,
I'm
right. They
saying
didn't get
the
audited
review.
financial. Right, right. They didn't review it. But one of the things that we always tell our clients, we have to keep in mind that in order for you to you want to get some money, you need to have solid financial statements. And that's what we
Yes.
stress. Yes. But the bank, even though they had financial statements, the bank did nothing to review to make sure they didn't require an audit of the financial statements.
Yep. Yep.
Anyway, we
How
all
do
over
you,
the-
yeah, how do
it's
you,
so much
yeah, so
information.
I know. So from a loan, just the acquisition of the loan and the expansion of the line of credit, there was blame all the way around.
Hmm.
Falsified financials,
Hmm.
and the bank did not do due diligence.
Right.
So that's on both sides.
That's on both
Um,
sides. And
yes,
and I don't want to absolve the Weavers of any
correct.
responsibility. Even though he was forging their signature and things like that, you got to know that there are loans out there. You got to know that there's a line of credit out there for your business. You got to
And you
know that.
can't just assume, because we talked about this in another episode, Kimberly. We were talking about knowing what you can afford in one of our episodes. And the
Hmm.
example you used was you go to the bank and they give you a pre-qualification letter for a house and they
Hmm.
say you can get a house up to 500,000. Well, you need to know that you may not be able to afford a $500,000 house. Just because the bank tells you that you can afford a $500,000 house, your budget may only can really afford 250,000.
Right.
And you need to know that. You don't just assume that because the bank is going to give it to you, that that's what you can afford.
Because that bank has some underlying stuff going on. They may give you a $500,000 loan, but that interest rate may be tricky, you know?
And they're
And
going to make
so,
money off of it.
oh yeah, they're going to make,
Well, that's the
which,
thing. It's like this isn't some benevolent situation.
they're in it to
People
make
in this
money.
to make money. And it's part of
Exactly.
what got so many people caught up in the housing crisis because they were taking out because the bank was giving people all these big loans
Mm-hmm.
because there was so much hedged on the back end that people were making a
Mm-hmm.
lot of money on.
Right.
And so were people like, well, the bank gave me that much, so I'm gonna go get the $1 million house when they knew they couldn't afford it.
Cannot afford that $1 million house. So anyway,
So
we
that's the same thing here, right? That is the same thing in this situation is that you as an owner are not even questioning like, wow, they gave us 66 million. Wow, they gave us, what how are we going to manage that? What's the strategy around that? How are we going to make sure that that's appropriate? Like asking those questions and challenging that and getting that kind of review. So that's the first part of just the loan.
right.
Then we get into the forgery, the alleged forgery.
Mm-hmm.
Maybe we should just have alleged just scrolling across so we don't have to say it anymore. The alleged forgery. Signing documents,
Mm-hmm.
forging signatures. And the
Mm-hmm.
fact that this is where controls come into place. When you do financial transactions, at your company, it should never just be one signatory allowed.
Mm.
Never.
Never.
Never. That is just it's plain. It's like a
And
period.
in a lot of major companies, you can't even sign a check.
Exactly.
You need like at certain levels, there are certain thresholds that if I'm buying something, we need to sign a check, or nowadays we're not signing checks anymore, but the approval for money to go out needs to go through two people. And so
Exactly.
when you're talking about getting loans, changing, modifying loans, and drawing down money on this line of credit, loan line of credit, this line of credit, and you just have one signatory and it's not even the owner.
Correct. And the thing is, so you think about it for your small business. Your bank account. So you get an accountant involved like us. You have them handling your AP, AR, so they're handling money coming in and money going out. You can set thresholds at a bank. Just a regular business account at Chase or Bank of America or Wells Fargo or wherever you're banking. You can set it where an approval comes to you so that you have to say yes, and you can say the amount. So maybe you're okay with $100, $1,000, but maybe things that are over $5,000 require they have to come to you, right? So you don't have to be a big company to have these kind of controls. You can be small, and there is the ability within things that are totally accessible to you to be able to have that kind of control over your money. So if you start that kind of practice now, then you'll be okay later as you start to grow, because you've already established the hot and sexy financial governance controls.
And I think even a smaller business needs them even more,
Right.
because a
Because it'll take
smaller
you out
business,
more.
right, it's easier for you, a little blip in your finances. So let's get through what Michael is being sued for, and then we can get into also the bank being sued, because that carry on. Okay, so wait, we talked about the
Signatory.
what we talked about, the fake financials. We talked about getting the expansive line of credit that they got, that he got, then forging their signatures for different things, like the article says, fabricating board approvals,
Yes.
because you should have a board of directors, and that board of directors should approve certain things, but he's fabricated all of this and no one is checking, and then he's using this money for his personal gain, like,
Yeah. Took it out
and
for himself. Bought a
right,
house.
right, bought a house, all kinds of stuff. And so, yeah, okay, so that's on Michael. But then the receiver, and I'm not even gonna say his last name, that's on Mike. I'm gonna call him Mike. I don't like people calling me Kim. Call me Kimberly. I hope he doesn't like people calling him Mike. That's on Mike. But then the receiver, which I'm getting more and more respect for this receiver as I look at all this. They filed a lawsuit against Farm Credit, the bank, because
Yeah.
they were negligent in this.
Yes.
And
Yes.
so that is even more, because, like you said about banks, they make money on your loans.
Yep.
Every time Mike modified that line of credit, the bank earned fees.
Yep.
Every time they process a drawdown, and he processed, what was it, 67 million in drawdowns over a matter of what, 30, 20,
Like
it was
like
28
12
requests.
12 months.
Yeah, a little over a year, a little over a
Yep.
year.
Yep.
They approved all these drawdowns, and it was 28 separate draw requests, which means you got a fee every time. So the
Yep.
bank is making money, and
Yep.
they're not looking at to see if this is going to get paid back to us, because if they did their due diligence, they would know that this company cannot handle this amount of debt and pay it back. They earned approximately 400,000
400,000.
in amendment fees, and then and as they expanded the revolving facility, they earned money on that.
Yep.
They were not doing what they needed to do.
No, because if no question was ever asked that if you expanded from a $35 million line to a $67 million line in less than a year, what's the driver of that? What in the business strategic forecast that says that you need that additional line? Is it because you're not managing well?
Mm-hmm.
Right? Because keep in mind the company should be profitable. So
Right. If,
you
if
need
you're
to produce
growing that
profit.
much, you
You should
wouldn't
be able to
need
be
that.
profit. Sorry, go ahead, Kimberly.
No, no, no. I'm just saying, if you're getting this extra money, because we say get it before you need it,
Mm-hmm.
right? Get get
Get
the
access to it.
availability before you need it.
Mm-hmm.
So, if due diligence was done, then you say, okay, we're willing to expand your line, your availability, because you're profitable, you're growing, right? But then you would not need to draw down that much in such a short period of time.
Mm-hmm.
If the reasons were valid for expanding the credit facility, then that's just okay. We believe that you're a solid company and you can handle this. Then you wouldn't need within 12, 13 months to draw down the whole 67
Exactly.
million.
Exactly. Unless, I mean, because are you purchasing something else big, like other real estate, other manufacturing facility? Like your company should be profitable. You shouldn't have to need to go and get more debt without it being expansion debt.
Right. And so this is the other key to it. They were negligent in expanding the revolving line of credit as opposed to the real estate loan, because the
Mm-hmm.
real estate loan is backed with real estate. So
Right.
if the thing is you are expanding, you would have that collateral. You would have that
Yes.
land, the
Yes.
buildings, the equipment as basis for collateral that could guarantee that if you couldn't pay it back, I can take the land.
Right.
So, but they were like, nah, just take the cash.
Mm-hmm.
Just
Mm-hmm.
take the cash
Yes.
on, we trust you
On the strength.
on the strength. Just take the cash and, oh,
Yeah, it's such horrible financial practices, and watch, business owners watch a slickster
mhm,
because if Fawn or what's her husband's name, Kevin,
Keith,
Keith,
the
if
Weavers.
the Weavers, if the Weavers had gone to Mike and said, let's get an audit done, what do you think Mike would have said?
Mike would be like, no, 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 no. We don't need that. Everything's under control.
Exactly.
I wonder where did they find Mike?
Exactly. And that should have been your red flag. Any finance person you're working with, if you say, I want to bring in an independent just to get a review, make sure we're good, if they hesitate, you got a crook. I could put it 99.9% of the time. You've got a
Hmm.
crook that's been stealing from you.
Right, right.
Because anybody who is above board will say, yes, yeah, let's absolutely, let's make sure that, there might be things that we need to learn. There might be things
Yep,
that we're missing because I
yep,
may not know everything,
right.
right? Me and my team may not know everything. It'd be great to get some outside input. If they're
Especially
not
when you're
saying
growing.
that, especially
Especially
when you're
when you're
growing.
growing so fast. It's
Yes,
like we might have missed something. Because when you
yes,
have fast growth, sometimes a lot of times the infrastructure to handle that growth does not keep up. And so that's when you welcome someone to come along because we may have missed something as we were growing.
exactly. Exactly. You can't be so caught up in your own success that you are not paying attention. And that's what the Weavers did. I think they got so caught up in how this was growing and feeling good about it, which I want you to feel good. Feel
Right.
good about your success, all those different things, but you can't do that without keep in mind the sexy finance governance.
The sexy governance. What
That
Cardi B
sexy
say?
governance.
She say, I like boarding jets I like more than sex, but nothing in the world that I like more than checks. Money.
Exactly. Put the heat, put the fan up, put
Yeah,
the
that's a
fan up.
woo. Nothing in
Yes,
the, yes, it's sexy.
yes. And so, I think, have we beat it to death? But that is the main thing why we wanted to come back on here, because we've seen businesses we care about, love, want to do well, just make these kind of mistakes over and over again. And they can be avoided. You do not have to go down this path. You do not have to have this kind of experience. Learn from it. Learn from it. It's not that hard to be financially sound. It really isn't.
Mm-mm.
It's just going to take some people telling you no. There are going to be people who tell you no, like ourselves. There are going to
Mm-hmm.
be people who tell you, "Hey, let's wait." There are going to be people that say, "Hey, let me step back and let's do some analysis." There, it may be that person needs to come in and do a review, and it costs you money.
Mm-hmm.
So, right? So if they come in and audit, costs you money. But guess what? What it saves you on the back end is you don't lose your company.
Right, right. It's a little maintenance on the front end. It's like your car. If you don't
Yes.
get your oil changed regularly, your engine will lock up. What is
Which one you
what's
want?
to spend this $70 every 3 months? I don't know how much it costs. $70 every 3 months, or spend thousands of dollars when you got to get a new engine. So
Correct.
get it on the front end. Do regular maintenance on your financial statements, and
Stop
know what
being
you're doing.
cheap about getting financial governance controls. Stop being cheap about it. It costs you your business. That's it.
And take the time to go over it with your financial partners.
Yes.
And if they're not reaching out to you to say, hey, let's look at this, reach out to them. Don't
Yes.
wait. We say this all the time. Don't wait until tax time. Because another thing, they hadn't filed taxes since 2018.
Yes.
Oh my God.
Yes. How can you have a loan? How I don't
You
know any
can't.
bank that doesn't require you to send your tax return. When we're trying to get our little $20,000 loans, they're hassling you about getting the tax return.
Right.
They had 67 million, didn't have to turn in their tax return. Mike and somebody at this Farm Credit, they in it together.
Right.
We've been looking at, we used to hunt down fraud back in the
Hmm.
day.
Back in the day. And
So
and
we know fraud. We know fraud when we see it, and we know
and these are
collusion. Collusion.
fraudulent activities. Collusion, fraudulent activities, all of this.
There's collusion for sure, because there's no way that you go from 30 to 67 million in a year. You don't ever have to turn in your tax returns. You don't have to turn in your financials. You don't have to get
Well,
an audit.
right. They probably turned in financials, but they were fraudulent
Well, but
financials.
I
They
mean
were
audited
fake. Yeah,
financials.
yeah. But
Audited
audited
financials.
finance, all that money, I'm disgusted.
Yeah. So come on, y'all. Let's learn from this. And I want the brand to survive. I hope it remains majority black owned because of the history of
And the
what Uncle
legacy.
Nearest is, and that it was the black distiller that taught Jack Daniels, right? That is
Right.
that is the foundation of it. That his is it his great granddaughter or granddaughter? Great granddaughter?
Great. Well,
Great
descendant
descendant.
is an award-winning master blender,
Yes.
and
So
I
she's the
that's
one
who,
making the product,
right,
right?
and that's who's front of mind now for me.
Yes.
Um,
Yes.
still love me some Fawn Weaver. I'm just a little disappointed,
Yeah.
but Victoria Edie Butler, she's front of
Yes.
mind for me because this is her legacy, and
Yes.
she has to watch it be destroyed in the public eye. Her
Yes.
family's legacy,
Yes.
and
And the product that she's created, the
that is
product
it's a
that
good
is
product.
very good.
I'd be
So,
ready to throw some bows.
yeah, exactly. So, so yeah, I agree. At first, I'm all, we're accountants. We are automatically skeptical of everybody.
Hmm.
And so I'm glad to see that the receiver looked like he's done his job. He got a nice little penny. I wish we could have gotten that. We're $4 million, I think, is what he's gotten paid over this last year. So good work if you can get it. But it looks like he has done a thorough review. But keep in mind, yeah, $4 million for that receiver. You know how much an audit probably would have cost them? Maybe 100,000.
Yep.
150,000. That's how much an audit would have cost them. 150,000, y'all, on to keep your company to grow, to have known to fire Mike and sue him 3 years ago. Like, what's that? What's 100,000? 4 million a receiver just made to uncover everything that would have been uncovered by a review. All right.
All right.
Well,
This is a little
so
depressing, but
I
yes.
mean, normally we end with our shooting the
But we done
topic,
shot it all up.
but we shot it all up and for this one because what it comes down to, what I think we're going to leave it with is Kimberly, April, and I at Your Balance Partners. As we have mentioned in many podcasts, we want to see businesses succeed. I'm actually working with a small business right now trying to tell them, hey, I'm trying to tell you how to do a contract properly. Just listen to me. Stop fighting it. Just listen to me. We want to get this information out to you. So this is a tease. We have a program we are building called Cash Flow Confidence. We've talked about cash flow confidence a little bit in the past, but what we've recognized and we've gotten feedback from small business owners, they need more. They need access to really understand the information in a way that they can digest it, and they need support. So we are putting together a program that will be there for you when you're ready to be able to take control of your financial future of your business and thereby your personal as well.
Yes.
And so be on the lookout. We're working on it feverishly to get it out to you as quickly as possible. We are super excited about what that's going to be. The Cash Flow Confidence program, I think it's going to change small businesses' lives because there's nothing else out there like it. So that's our tease. Be on the lookout for that. We want, by the time you get to the level of Uncle Nearest, you're so tight, you got those sexy financial governance controls, and you are thriving.
Yes.
And that's what we want for you. Kimberly, anything else?
Nah, I'm just, look, nothing else. I'm gonna go have me a drink.
Is it an
An
old
Uncle
fashioned?
Nearest old fashioned. Yes.
We got bottles.
Yeah, I got bottles. Nothing else. So yes.
All right. Thanks, everybody, for joining Balance Your Books podcast. Again, check us out on not only our YouTube channel, but on Apple and Spotify as well. On the road, get this information to grow your business. Till next time. Thanks for joining.
Bye bye.